So we are starting now on Chapter 3. We will be moving into the study of Social Security taxes. And we've already learned an awful lot about Social Security taxes, the 6.2 and the 1.45, and that it's matched, and that the OASDI is capped, and all that good stuff. So that part's going to be review. We're also going to look at number 3, objective number 3, SECA, which is Self-Employed Contribution Act, when you double all those rates. We're going to learn how you deposit your FICA and your federal income tax. So if I'm taking money out of your paychecks, I have to give it to the government, and there's rules of how that happens. And then we're going to do our first tax return, which is a quarterly federal payroll tax return. So super exciting, right? Okay, you guys know all this. FICA started in 1935, part of the New Deal. The employer and the employee both pay in 6.2%. It's capped at $128,900. And the OASDI is 1.45 plus 1.45, except if what? Make over 200 grand. Then 0.9% tack on, but just for the amount over the 200, right? And then does the employer match that? No, it's just an employee tax. Current administration hates this tax. It was part of funding Obamacare, which is a thorn in the side of current folks. So they tried to rescind this additional 0.9, but it has not gone away as of today. So we're still studying it and using it. Okay, then it was a full 16 years later, Congress woke up and went, oh my gosh, all the people that are self-employed aren't paying into this. Because there's nobody that's taking it out of their paycheck, right? So they passed the Self-Employment Contribution Act. And if you're self-employed, it depends on what kind of entity you are, whether you're an S corp or a partnership or a sole proprietorship, but for our simple purposes in here, you don't take wages if you're self-employed. You earn income. So in accounting speak, what is net earnings? What minus what? Revenues minus expenses. So I've got this tax business on the side that I do every spring, and my revenues are X, and like I'll just make that numbers. My revenues are $10,000. Now, what would be some of my expenses?
Equipment.
Yeah, my equipment. I've got to have a pretty high-powered CPU to use the tax software. What else? Yeah, that's about it, really, is this guy. Yeah, supplies. I'm going to need some toner cartridges and mechanical pencils. I'm going to need to pay for my software every year. I can write off a portion of my internet connection, portion of my cell phone bill because I'm talking to my clients.
Are you mobile?
No,
Do you have a space?
in my house. So I can write off a little piece of my house. Those are all my expenses. So then I come down to my net earnings and say that after I subtract all my expenses, my net earnings are $6,000. If you added 12.4 and 2.9, how much is that? 50. Thank you, 15.3. So 6,000 times 15.3, just estimate. You don't even do the 0.3, just estimate 15% in your head. What's 10%? 600. And then another 5 is 300, so about $900, right? It's very interesting. Younger people generally don't know how to estimate because you've always grown up with digital capacity.
It's almost frustrating to have to estimate. So like, why would I estimate when I could just do exactly what?
Right, but and here's why. Here's why and this may be a little generational, but if I'm sitting across the table from a tax client and he or she goes through that scenario that I just gave you, and he goes, like, how much roughly am I going to have to pay in I think 15% for this, 20% for income taxes, 35%. I don't want to get out my calculator and go through it. I want to just say that you're gonna owe about $3 grand.
I do that when I do tips.
Yeah, that can be, it's just, and I totally, I think it is generational. Like, we just grew up estimating. When I took the CPA exam, we didn't use it, we weren't allowed to use calculators. It's like 2.5 day exam, no calculators.
The first time I went to use a calculator was algebra.
Okay. And also to date myself, when you went in to take the CPA exam, they asked you if you wanted to sit in the smoking or not smoking part of the room. It's like sitting in the not smoking part of the room isn't helpful when the other 80% of the room is smoking.
But you know,
It's pretty funny. Okay, so that's SECA. And this is something we're going to be working on in this unit a lot. Okay, so the three issues are you an employee or are you independent? What are the three categories again? I'm trying to figure out which you are. I asked, do I have financial control over you? Do I have behavioral control over you? And what is our perceived relationship? And then is what you're doing considered employment, and is what I'm paying you taxable under FICA? And there's lots of different kinds of wages and benefits, and some are taxable and some aren't. Okay, so we've been through this. Behavioral control, financial control, etc. Then there's something called statutory categories. What does statutory mean? If I tell you that it's a requirement, a statutory requirement, what does that mean? What is a statute?
I know statute of limitations.
We use the word a lot. Statutory rate, statute of limitations. But what's a statute? It's a law. It's a fancy word for law. Okay. The law has many statutes. ST, AT, UT, ES statute. Okay. These are statutorily covered by FICA. In other words, it doesn't, you don't even go through the, are they independent or employed? If you are a full-time life insurance salesperson, and you work for a broker, an insurance broker, you're covered by FICA. If you are like the Schwann's driver, right, that goes and sells food and beverage out of a car, or dry cleaning, I don't know, I can't come up with any good examples of a commission driver of a dry cleaning bus, but I guess. So when you see really specific things like that, it's a result of lobbying efforts by certain industries. Full-time traveling salesperson, or anybody that's working at home, we can use Jess as an example again, where she got all the things to compile, put together pieces, assemble pieces of jewelry. Okay, statutorily covered by FICA.
So is that because it's interstate commerce that has to do with that? Because I know some.
Go ahead.
It's like truck drivers that are like, even though they're part of like a company, they say only one person travels out of the company and they're the only one covered under like that.
So truck drivers are pretty interesting. First off, transportation workers have a lot of exceptions under tax law because they do have a powerful lobby. Secondly, lots of truck drivers are self-employed. So they own their own rig, and then they contract with all of you guys to move your merchandise from point A to point B. So there's a little bit more work that we've done to answer that. But good question. Okay, other specific examples. Some government employees don't pay into OASDI and HI. They have their own retirement system. It's a really big point of contention when you have a group of people in Congress that are making laws about retirement systems, healthcare systems, and then they don't participate in the ones making the laws of them. They've got their whole own separate parallel system. Pretty big point of contention. An in-patriot is somebody that is coming out of the country and working in the United States, but they have no intention of ever becoming a United States citizen. Can you think of an example of that? When's that allowed? Yeah, maybe interning, or you have a specific skill set that we can't get in this country. And there's lots of industries in the STEM fields, science, technology, engineering, and math, because we simply don't train enough people in those fields to fill the employment requirements in places like Silicon Valley and the Boston, New Hampshire corridor, places like that. Expatriate is exactly the opposite. An expatriate is, they're called, the short term for it is expats. And there's lots of expat communities all over the world. We travel quite extensively in Central America. There's lots of expats in Panama, and Costa Rica, and Belize, and Nicaragua. And if they're working in those countries, they're still subject to FICA. Okay? And then family employees. If I've got a sole proprietorship and I have my children under 21 working for me in my company, I don't have to pay FICA on them. Specific exemption. Household employees. Okay, what did we learn about household employees before? Do we have to like W-2 them, get a 9-9 and do all that for our nanny or our chef or our gardener? Have to go through all that? Huh? If they don't live, well, even if they live with us, I've still got to do all that. I just aren't paying overtime. But I have to, by law, if you are working for me more than 8 hours a week or earning $2,100 or more a year, I've got to do all that. Got to get a 9-9, got to get a W-4, got to withhold taxes, got to deposit taxes, got to issue you a W-2, got to cover you under workers' comp, right? Household employees. Is this a law? Yes. Is it complied with? Sometimes people will ask me, clients will ask me, about this, and then when I tell them what the law says, they're like, yeah, I never said that. Like they don't want to calculate payroll taxes and make deposits and fill out quarterly payroll tax returns.
But what is the punishment for not?
Oh, there's civil penalties. Oh, absolutely. So if you're a citizen and that's happening to you and you find out about this, you just report it to the Department of Labor and Industry and they're going to be in a buttload of trouble. The problem is that lots of that under the table exchange is by folks that are not documented to be working here. So they're not calling anybody and bringing attention to their situation. And my sister-in-law lives in Manhattan and their whole group of professionals that work in Manhattan, they all have Jamaican nannies. And they pay them quite well, but all under the table. And it's, I can't hear this, okay, ethically. But it's just what happens. Okay, so with an independent contractor, if I hire you as an indie, as an IC, do I have to take FICA out of the amount I pay you? No. Do I have to match anything? No. No, you're not my employee. Do I have to even get a W-4 from you? No. What do I get from you instead? So I get a W-4 from you if you're an employee, right? And we're going to go through that in chapter 4. But you've all filled out the W-4, I assume. Name, social security number, how many allowances you want, etc. If you're an independent contractor, you're not an employee, I don't give you this. All I'm going to get from you is called a W-9. And all it has is your name, address, and social security number. Because at the end of the year, if you're my employee, what am I going to send you at the end of the year? W-2, and you're going to use that to do your taxes, right? Do I issue a W-2 to my independent contractors? No, because they're not employees. What do I send them? Anyone know? A 1099 miscellaneous. And that's simply a form that says, here's how much I paid you. And we'll learn the rules about this. You only have to send them if you get over $600. So, so that's so the independent contractor, back to this guy, that's my whole point. The independent contractor, this guy or gal, they've got to pay in their own double share, right? And what was the percentage again? 15.3. So if you guys all work for me, and say you code software for me, and you live all over the country, and I treat you as independent contractors, but I give you the protocol on how to write the code. You all are required to be online, working in a synchronous environment from 9 a.m. to 4 p.m. Mountain Standard Time. I very stringently review your code, and then I throw it back to you, and you've got to sanitize it for me. So it's just a really rigid set of protocols you have to go through. And one of you comes to a class like this, it's like, wow, she's got complete behavioral control over us. I don't have any other clients. I don't get to have any discretion in how I do my job. And you start thinking kind of like, wow, I'm really an employee. And you file a claim. All of you are going to be covered under the adjudication or the decision. And the decision is that I've misclassified you. You're really all my employees. Okay. So now what happens? I have got to pay a penalty that is equal to my share of FICA, your share of FICA, and your income tax withholding. Wow. Huge, huge penalty. Now, if you have reported your earnings on your individual 1040s, that penalty is voided. And if I've sent you 1099 miscellaneouses, it may be reduced, but in the future, I have to reclassify you as employees. So the lesson was, and this happens all the time. Sometimes I think it's purposeful, and sometimes I think people just don't know. Okay, what are taxable wages? Obviously, anything that I pay you, your wage, your salary, your bonus, your commission. We've talked about meals and lodging. I have to pay Social Security on that, but only if it's for my convenience. If I give it to you for your convenience or your benefit, no, I'm sorry. I have to do Social Security on it if it's for your convenience or benefit, because then it's like compensation. And then the fair market value of anything I give you that's not cash. I give you stock. I give you gifts. You get to go to the company ski condo worth $500 a night for 10 nights. Okay. That's all taxable, and I've got to withhold Social Security on it and match it. So things like that, and people don't really understand that they're not free, are they? Because you've got to pay Social Security and income tax on them.
The employee then?
Yes, both of us do. Okay, fringe benefits. Again, people don't really understand this. Okay, Tyler, you are going to be going around Montana selling equipment to veterinary clinics, and I'm going to provide you with a vehicle because obviously Montana, in the winter, I need you to be in a hardy vehicle. So I get you an F-250, and I let you just use it, okay? And you're like, well, I'm going to get rid of my Pinto because I'd rather drive the truck, right? Well, obviously he's going to have some personal miles. So at the end of every year, I'm going to make you tell me how many personal miles you drove, okay? And then I'm going to go to this big table that the IRS produces, and I'm going to look up F-250, a 2017 F-250, and it's going to tell me how much per mile I have to put on this W-2.
As far
And pay
as
tax on it.
gas goes, since it would be part of fringe benefits, if the company paid for gas,
It's going to go on your W-2.
that would be taxable. But if you're paying for gas, would that be,
Nothing. Just a personal expense.
you couldn't like deduct it or?
You used to be able to deduct it before the tax cut and all that.
I don't understand what you mean mileage based on the W-2.
So, great question. So, I'm like, here's the keys to the F-250, and at the end of 2019, at the beginning of the year, I checked the odometer, and it's got 19,000 miles, and at the end of the year, I checked the odometer, and it's got 30,000 miles. And I'm like, Tyler, how many of those miles were personal? So he drove 11,000 miles, and he goes, 40% of them were personal. So 11,000 miles times 40%. I have to multiply those 4,400 miles by something and put it on this W-2. So I go to the table that the IRS provides me on irs.gov, and it's a new truck. It's a 2017 truck, so it's going to be a pretty high per mile rate. It's 30 cents a mile. So I pay Tyler 50 grand a year. His W-2 does not come out with $50,000. His W-2 comes out with $51,329. And that's what he has to put on his tax return. That makes sense?
Those were his
Personal miles.
you don't have to count it for business.
No. Same thing with premiums on group term life insurance. If I buy all of you guys a life insurance policy for $20,000, why am I doing that? Am I trying to protect your family if you pass? On $20,000? Yeah, it's like a burial benefit. Okay? And so say I get $20,000 on all of you, but Gabby's my CEO and I buy $1 million policy on her life. Now I am trying to give her a benefit so that if she passes, her family's taken care of. And those premiums are going to be pretty pricey, $3,000, $4,000, $5,000 a year. She's young, healthy, non-smoker. Okay, the older she gets, the more expensive they're going to be. So the value of those premiums shows up on your W-2. Vacation pay, anything like that. The value of the stock I give you.
So like from the HR perspective, don't you have to have a reason why you have that insurance higher for one employee and not the others?
Certainly, and I can absolutely, there's actually a term for it, it's called key man life. I use that to recruit you. Okay, now we're back to the tips, and now this gets even a little crazier. So what did we learn about tips in the last chapter? Can anybody give me a recap?
They have to make
That I have to pay minimum tip wage of $2.13 an hour, definitely. What else? What else did we learn about tips?
you gotta make
Between tips and wages, we have to get to minimum wage, right? So here's what the problem is. You guys tell me what your tips are. And so I own the Iron Horse. And y'all all work for me at the Iron Horse as servers. And you tell me what your tips are. Okay, not a good example because we're in Montana, but pretend like the Iron Horse is in Idaho where you don't have, where I only have to pay you $2.13 an hour. Can you see what the problem is? If you tell me, Lisa, last week, if you're a good server, you probably can bust out $125 a night. Last week I made $600 in tips. If I'm in Idaho, how much do I have to pay you in gross wages? Remember that number? Or you can calculate it. What's the minimum tip wage I have to give you? $2.13. How many hours did you work? 40. So what gross wages am I paying you? $2.13 times 40. Your gross paycheck is $85. $2.13 times 40. But when I go to pull out OASDI and HI from your check, how much do I calculate the 6.2 and the 1.45 on? This plus this. That's the whole point. So figure out my OASDI and my HI. And then pretending there's no other taxes, tell me what my net check's gonna be. And actually write this down, please, on your paper. So your gross check is $85.20. Your tips were $600. So for those of you listening to this, I'm going to go ahead and put this up on Excel. So my gross paycheck equals 40 hours times $2.13, which is minimum tipped wage. Now what I want to know is how much is my OASDI and how much is my HI and what does that leave me a net paycheck of? Well, the point is you've got to calculate the 6.2% on $685.20. So do that, and then calculate the HI, and you know the percentage. What's the problem, Tyler? Okay, maybe I didn't make the numbers big enough. So I've got to pay $42.48 of OASDI, right? Did everybody get that number? Sure. Go ahead, ask me.
Just how did that?
Oh, sure. So you know the percentages are 6.2 and 1.45.
We could not just put them together.
You can, but we're always going to split them out because that makes you think of two things. A, have they capped for OASDI? And B, are they over 200 grand and I have to tack on 0.9? It gets way too complicated when you try and do that all at once.
Okay.
So we will always split them out, even though, yeah, you're completely correct. In this example, you wouldn't need to at all. So the HI is $685.20 times 1.45.
So, you say the problem is that all of the kids.
There isn't a problem on this one. So my net check is $32.78. Now I work in the Bellagio in the most high income, highest stakes poker room in the city of Las Vegas, and my tips were $6 grand last week. Now what's the problem? You don't even need to do the math. I don't have anywhere close to enough gross to take your FICA. Right? I made $6 grand last week in tips. So I go to HR at Bellagio and I'm like, I need $6 grand last week. The guy came from South Korea and tipped me $5,000 checks. My OESPN is $424.80. My HI is $99.40. My little check of $85.20 doesn't have anywhere close to enough to absorb my taxes. That means I'm not gonna get a paycheck, and as that server, I'm gonna need to be making estimated payments to the government. Because my checks can't begin to absorb my tax liability.
Oh,
We'll talk about this tomorrow, Monday. Enough fun for today. Please go ahead and read chapter 3 for Monday.